Around 126 nations are set to attend the BRICS Municipal Conference, showing increasing interest in joining the bloc and moving away from reliance on the US dollar. This growing momentum among developing countries reflects a broader ambition to strengthen local currencies and diminish the dominance of the US dollar in global trade.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, I'm Vince Lanci. Today, we will do a BRICS Summit update, and it's getting a little bit spicy over there, and examine JPM's warnings of gold's overbought status. And doing so, in our analysis of that content, we stumble upon evidence that the bullion banks are overextended in their short positions. We'll discuss that more in premium. But first, let's look at the markets. While we're doing that, you can take a look at what's going on in Nvidia, which is the highlight of yesterday's activity. The dollar is 101.20, up 17. 10-year yields are 383 flat. The S&P 500 is up 31 at 5607. The VIX is 16, down a percentage point. Gold is 25.20, up $17. Silver is 29.50, up 38 cents. Those are very nice, very healthy bounces for markets that were decimated yesterday. Decimated is the wrong word to use. Those are very healthy bounces and are a sign that they may be overbought, but there are shorts that need to buy. Copper is down a little bit less than a tenth of a penny at 417.40. Gold, silver is slightly lower at 85.44. WTI is up 63 cents at 76.01. Natural gas 196, down almost 2 cents. Bitcoin 60,000 is the new home, up 1,000 points. Ethereum 25.59, up 31 points. Lagging higher and leading lower, Ethereum. Palladium and platinum. Palladium 956, up 17, and platinum 940, up 11. Grains are mixed. Soybean is pretty strong, up 11 cents at 10.09. Corn is trailing it, up a penny at 3.78, and it all comes at the expense of wheat, which is not on your screen, down 2.5 cents at 5.36. Okay. There are a lot of news items coming out specifically on the BRICS and the things that are of interest to us as precious metals people and commodities people and geopolitical people. So we're going to start devoting some of this to that news itself. The news section will become more about things that we're interested in, at least until the election. So let's see how that works out. All right. The homepage. Front and center, Tom Luongo interviewed, well, it was more like a discussion. Tom hosted a discussion with me and newcomer to his show, but not newcomer in the precious metals community, Eric Young. Eric is known as King Kong on Twitter. Now, Eric is outspoken, very sharp, and has one foot in the West and one foot in the East. I think he resides in Hong Kong, I'm not sure. But he's very familiar with the mainland of China, and he's very familiar with the United States mindsets and our investment biases. He shed some, I think, important light on Chinese demand, what it is, how it's evolving, and what it is not in terms of being overbought or oversaturated. And I think this is a very good program to listen to. Of course, I chime in, and Tom runs the show, and these are always great conversations. And Eric is a welcome addition. So we recommend that you watch that if you're a fan of these type of things. Here's a story that came out today that we wrote. The BRICS 2024, 126 nations eyeing US dollar exit. We're going to discuss that. There's a compendium of stories from yesterday. There's Asian war that could be happening as well. Also, India begins negotiating with China and Russia on M-Bridge unit weightings. We'll discuss that as well today. Let's get right to the main topic. JP Morgan put out a report on the 22nd that looks closely at gold's current investment situation in the context of other markets. So, reading off of my own screen here, this is the current situation in gold. It is overbought. It is a crowded long trade, yet no one is going to sell it short. That's our opinion. And something new, there are likely options shenanigans afoot. This is an early look at what we think is going on there. But anyway, there's a picture of the report itself. We have broken out all the gold content, and we have broken it down and analyzed it for you with many charts. Here's a little bit more on that. Being overbought is not new for gold since December 4th, and so we are not worried about that with the BRICS summit and presidential election coming. These types of indicators, the ones in the JPM report, are something to worry about afterwards, however, and as such, they warrant closer inspection, which we gladly do at bottom. Obviously, this was written by me because there's typos in it. So there's one of the charts, too many futures longs, but few ETF buyers. JPM notes that speculative investors' positions across commodity futures look oversold in Brent, neutral in copper, and overbought in gold. When you hear copper, think silver, right? So again, we break out and break down the information behind the statements, highlighted, and discuss the potential risks associated with their observation. That's at the bottom of this report. We're also going to stay with us at the end. We'll make a quick comment on the new information that we just got. Bottom line there, if you're trying to get to this, gold is overbought in the short term on the future side. And so it's susceptible to the downside. That's what traditional analysis tells you. And it's not wrong. The thing is, gold's been here many times since October 7th, and more obviously to me, since December 4th. It gets overbought. The open interest comes off, the market goes sideways. So we are overbought. The open interest could be coming off and the market goes sideways. I don't see that yet, but overbought does not mean bearish. Overbought means a pause. But once the events that are going to trigger more buying are over, meaning the BRICS summit and the election, well, then you could see the overboughtness really begin to weigh on the market, at least in the short term. Anyway, so let's move on to the next topic. That we have that at the bottom. There are two stories. There's going to be a lot more of these as the summit approaches. BRICS 2024, there are 126 nations eyeing a US dollar exit. That's how many nations are going to be guests at the BRICS summit. Around 126 nations are set to attend the BRICS Municipal Conference, showing increasing interest in joining the bloc and moving away from reliance on the US dollar. This growing momentum among developing countries reflects a broader ambition to strengthen local currencies and diminish the dominance of the US dollar in global trade. That's a story that we wrote. The link is there. That's free to all. BRICS. India begins negotiating with China. This is a story we saw in I forget, it was the Hindustan Business Times, but we cited them on that. India raises the question, this is us talking, if they will use a centralized notional currency for commodity trade, how will it be weighted relative to national money? And will it also obviate our ability to use national bilateral currency deals? In asking those questions, India is pushing back against the potential of a China and Russia dominated market. The concern, which has been to this point very well addressed by China and Russia to a lesser extent, it's not really their place to say, is that the yuan will not replace the dollar. And there are many ways, many holes that could happen. One is the yuan is too heavily weighted in the BRICS basket. Two is the price of gold could be manipulated by China lower or higher, thereby hurting weaker players, et cetera, et cetera. They've addressed these things in actually very good faith, I think. But India is now saying, will using the basket remove our ability to go bilaterally? Do we retain the choice? And that's has to be something they've already discussed. But the fact that India is going public with it means it's getting a little bit spicy. Now, I don't know how it'll be solved, but knowing that China's involved, it'll probably be solved behind the scenes. They're very demure about how they handle things. Anyway, these two stories we have on our site. The links are right there as well. Feel free to go to them. Today, data is trade inventories, home sales at 3:30 p.m. Atlanta Fed President Raphael Bostic speech. We don't care about that. As I said, you care about home sales. I want to talk about before going to the little premium comment at the bottom. I would like to talk about there's the premium section. I'd like to talk about a couple things. Nvidia's earnings came out strong. We have that in the report as well. But the stock sold off. Now, the market's not even open yet. But let's assume that the stock market, that the Nvidia, let's assume that everything that you're looking at on the screen remains as it is. Nvidia is weaker. The stock market in general is broader and VIX is down. This is a sign, if you're an equity person, you're a bull, of a broadening bull market, taking your money out of Nvidia and putting it in something else. It's that simple. Another way to interpret it is, well, the dollar is stronger, gold is stronger. This could be the market beginning to crack in a stagflationary way, especially with oil up. All right. So bears are going to look at this and say Nvidia is due for a sell-off even more, and the stock market is being held up by Nvidia, and it's all legitimate concerns. But wait for the day to happen, right? When earnings are released at the end of a trading day, the weekends move first. Doesn't mean they're wrong or right. It just means that they move first, right? So what happens the rest of the day? Well, we're going to find out. When another comment about the bears, it may sound like the way I'm phrasing it that I think the bears are getting ahead of themselves. I'm not. You got Buffett selling Apple, right? And then he announces selling Bank of America. He probably sold more Apple, right? You've got other significant players selling large stakes in companies. So the rich are taking profits. Make of it what you will. All right, so let's do a little bit of gold here. Gold, pop some of those lines up. All right, so that yellow line, that's essentially the Michael Oliver line. And although I have it up there on a daily, you should look at it more on a weekly or a monthly. We're well above that. Focusing on a little bit more tighter time frame and hiding those lines, it's actually very simple. If you imagine Michael's line still there, what you have is you have buying in here. This is probably macro discretionary buying. Why? Because they bought it very technically. Central banks don't go, oh, I'll buy it when it gets to this high. Macro discretionary guys do that. This is macro discretionary piling in. This is probably CTAs getting out, and this is someone buying. Could it be macro discretionary? It could be, but I'm telling you, it's at least partially bullion banks covering shorts. Bullion banks are covering shorts now. I'm saying it like it's a fact. It's just conjecture, but I'm willing to bet on it. So if this market gets below here, you want to see how gutsy the macro discretionary guys are. Will they buy it here, or will they begin to sell it here? If the market gets above here, this was the Bank of International Settlements likely keeping a lid on it. If it gets above here, it should run, which is an easy thing to say. But I want you to think like this. Bank of International Settlements caps, market trades in a range. Unless there's an event, market trades in a range, open interest comes in, market rallies again, and open interest gets added to it. Something that we've shown going back for months. Ready? Here's your quick review. December, capped range rally. Capped, you can't see that one, but it happened there. Range rally. That one, it almost got away from them. Capped range, right? It's actually this whole thing here. This is the thing that Michael focused on. Michael Oliver. this whole, you could say that this is a cap too, it probably is, but this is where they said no more, right? You shall not pass. And the market ranged for here and then it rallied. Now, I don't know that this is a cap, but it did stop. This is a cap. So I'm going to call this a cap. I did before. Cap, range, rally, cap, range. Notice this, long and narrow. Forget that. Shorter and less narrow, shorter and even less narrow, and really tiny. If the market gets above here in this little thing here, I would be shocked. That would be a sign of the market getting away from them. Anyway, silver's playing catch up. What can I say? I mean, the silver market is in the process of offloading the remaining above ground supply that's not allocated, meaning all the silver being bought now in the world is industrial, not investment. All the silver being bought on exchange is investment or trading or gold's too expensive, I'll buy some silver. Okay. Right now, the industrial demand is being handled from various ways. Scrap, concentrate being refined, and investment coins being remelted for industrial demand. When that's done, if they can't get extra silver to put in the vaults, you see silver's going in the vault right now. If they can't get silver to go into the vaults, then silver's going to rally again. Keep your eye on China. China has become an importer again. All right, catch you guys later.
Thanks for watching this morning's Markets and Metals with Vince Lanci, brought to you each day by Miles Franklin Precious Metals, who we encourage you to contact for your next gold or silver order. And Miles Franklin brings us a gold and silver special each week. And if you've been looking for a pullback in the rally to purchase gold and silver, this week's deals include 1 ounce silver Philharmonics from the Austrian Mint in Austria, go figure. Fortunately, these beautiful coins are only $3.10 over spot, while we still do have silver under the $30 level, which it obviously eclipsed earlier this year. And on the gold side, this week's special is 1 ounce gold Cougarans for only $60 over spot. Again, you can place an order by calling 833-326-4653 or emailing us at arcadia@milesfranklin.com. Happy to answer any questions you have and get you set up with whatever you need. So call us at 833-326-4653. And as always, thanks for watching. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.